You're broke, you're a beginner, you want to know how you can get a property portfolio without having to invest hundreds of thousands of pounds. Well, this is the channel that is going to break down how you can do that. You see property gurus all the time explain rent-to-rents and LOAs and BRRs and flips, but they never really explain how you do them, or what they do explain is behind a paywall. That is not what this channel is about. If you are a complete beginner, if you are a property investor, I am going to be breaking down the strategies, the tax implications, how you can set up your companies throughout the next couple of months and maybe even years if this channel does take off. So please leave a like, share, subscribe and comment what you want to see and what you don't understand about property so I can break it down for you. But in these first two videos, we are going to be focusing on if you have little money, what you can do. If you have no money, you need to be moving towards deal sourcing because that will bring in some money and it's relatively cheap to set up and become compliant. You need a little bit of money to actually start getting properties, even if you don't own them. I want you to think of three companies throughout this first video: Amazon, Airbnb and Uber. None of them actually own the products they sell. They provide a service that allows people to use that service to get something. Uber allows you to use taxis. Airbnb allows you to book hotel rooms in houses. And Amazon allows you to buy products and have free shipping. They don't own those products. They just simply offer a service to allow you to get those products. And you're going to be doing the same with this first strategy. So let's get straight into it. The first strategy is called rent to rent. And in this video, we are going to be looking at what it is, the actual what, how you can use it, when you can use it, and the pros and cons of the system. So let's get straight into this. So how does rent to rent work? First, we'll go through the theory and then I'll show you the practical. So rent to rent, very simply, is where you rent a property from a landlord and then you rent it out for a higher price, whether that's as a HMO, as a single let, or as serviced accommodation. Now, is this legal? Because the first question you're always going to be asked, is it legal? Well, it depends. It can be legal. Sometimes it's not legal. It depends on the contract that you use. If you use something called an AST, an assured short-term tenancy, then it is illegal because it's subletting. If you use a commercial let agreement, it's legal. Think of a commercial let agreement like what you see in Suits in the later seasons when they let out a part of the office to the investment firm. It is totally above board to do that using a company let agreement. There will be a template for this down below. It's not legal advice. Do not use it. Get a solicitor to draw one up. It's just to show you what one is. And how it works is you're going to rent the property from the landlord and rent it out. Now, you'll probably think, well, why would a landlord want to do this? And does every landlord want to do this? And the answer is no. Straight away, this will become a numbers game, which I'll explain later in the pros and cons. You're going to want to stick around for that. But it's not as simple as every landlord's going to want to do this. There takes a specific type of landlord that wants to do it. So I'm going to give you a live example for one of my investor clients that I have. And it was a house. I'm not going to tell you the area, but it was a 6-bedroom HMO. And it was in a big city. Let me try this out. It was in a big city that had Article 4. Now that is important that it had Article 4, because what that means is that you cannot build new HMOs. You cannot turn any house into a HMO without getting planning permission, and the councils in these areas don't really give planning permission all that often in truth. So it was a 6-bedroom HMO, and the landlord could not for the life of him rent it out. It was in a student area right next to a big university, and on doing my research, the average rent that a student was willing to pay, including bills, and that is the important part here, including bills, was only £517 per calendar month. Now, if you do the maths, he wanted 3,403 without bills. Well, 517 times 6 is roughly not far from this valuation. £3,403 divided by 6 rooms is £567 he wanted without bills. It was no wonder why he was struggling to rent it out for the student year. It was right next to this big university and he couldn't rent it out, and he was tearing his hair out because he couldn't understand it. But when I did the research, this was how much people were willing to pay. Only 517. So straight away, he's not going to be able to rent it out. So I said to him, okay, I can offer you something like this. I can take the property off you. I am only going to be able to pay you about £2,000 per month. That's how much I'm going to be able to pay you, and that is on the high side. I actually started off at £1,800, and already you're going to be there going, well, why would anyone accept £2,000 when he could get £517? And the simple answer is in the formula that you, as a property investor, or as someone looking to rent, needs to understand. It's the 30% rule. And what that is you have to give 10% of your annual rent up in void periods when you're doing your calculations. You also have to give up 10% in management fees as well. And then you also have to put 10% to the side for any maintenance work that needs doing. So when you're looking at that rent and going, oh my God, I can make 517 times 6 per month. Yeah, but at the same time, you've got to take out 30% of that rent. This is how you can find successful rent-to-rent and successful areas to invest in, is using this formula, knowing that 30% of your rent every month is gone. And it doesn't mean that every month you're going to have to pay for maintenance issues, not every month you're going to have void, but void periods roughly account for a month a year. And if that's the case, then that's about 10% that you're going to have empty rooms, or an empty room, depending on whether you're lent to students or whether you're lent to professionals. It will vary. Students, you're less likely to have big void periods, but you're still going to have void periods to clean the house out. So straight away, if you look at this, and you don't base your figure off him 134, you base it off what you know you can get. So if I'm including bills, and bills work out to about £17 a week per person, so I'm going to make £500 a room after bills. So the amount I'm going to make is £3,000, right? But at the same time, I've got to pay a management company, and because it's a student let, that maintenance will be higher because students tend to be a lot more reckless than professionals. So that's probably going to be a lot higher. So you're still thinking, well, why would he accept £2,000? Well, if I know that the most I can get in rent, and I showed him the figures, I showed him all the workings out, is 517. The most I can get is £3,102. That is, with it full and me paying bills, that is the figure I can get. Well, let's work out then what it would be here with these. So £3,102 minus 30% is £2,171.40. So at this price, this is because I knew I could rent it out and I would have so little void periods, in truth, that I went up to this price of £2,000. He is looking at £2,174.40. That's how much he can get maximum in the area. And even if rent slightly increases, it's not much more than that amount. So he's only really £171 a month worse off if he accepts this. So the pictures he had were absolutely crap, so I knew I was going to have to take new pictures and bring in a professional photographer to take pictures, and I knew that there was going to be a big upfront cost. So realistically, while I'm bringing in £3,102, I'm making about £1,000 minus the bills. I'm looking at making about £800, and I've got to pay the management. I'm not going to have void periods, and I've got maintenance. So realistically, I can look to make about £500, £600 a month from this deal. And he said, okay, I'm interested, Andrew, but I still don't understand why you would want to do this. And the simple answer was, well, my investor, he has a lot of money, but he wants to build up his cash flow, and he's happy to take this on a 3 or 5 year lease agreement and rent it out for you. Basically, he'll pay you a guaranteed amount, and he pockets the difference. You're not having to pay a property management firm. You're not paying voids. You're not paying maintenance. So this is £2,000 that is totally passive now. Now, unless a big issue happens, the boiler breaks, the roof collapses, anything over about £500 worth of damage, you're not going to have to pay. So you can relax. And you're trying to rent this place out. You can't rent it out. So why not accept this? Because it's a company that's renting it. So if the company don't pay, one, you can sue the company. Two, you get a personal guarantee from the director of the company. You can also sue him for the money. And what my investor's going to do is take out something called rent guarantee insurance. And what this insurance does is it allows, if it's not fully rented out, it allows the investor to go to the insurance and say, I need the money, because it's guaranteeing you your rent. Now, £2,000, realistically, he's only got to fill 4 rooms to make the 2,000. Okay, he's got the bills to pay, the management, but he's going to be less out of pocket with 4 rooms filled. And if he fills 5, that's when he starts making his profit. He makes his profit off the 5th and 6th rooms, realistically. So the landlord went away, and he came back and said, yes, I'm really interested. This is something that's going to work out for me. And he was really interested. Which gets me on to the point that no guru seems to talk about. How many landlords are actually like this? Now, there are plenty of landlords who, for whatever reason, misinterpret how much rent they can get. They might not live in the country anymore, or they might be tired of dealing with issue after issue after issue. They might not use a management firm, and they might be a working landlord. And if that's the case, then this works really well for what we call tired landlords. And how do you find them? You can look on Spare Room. If the pictures are crap, if the rooms look crap, the landlords are more likely to agree. Now, the issue with this strategy is every Tom, Dick and Harry who wants to get into property, who doesn't want to do deal sourcing because deal sourcing is a full-time job, will do this strategy. They'll all do this strategy. And that means that there's a lot of competition, and a lot of landlords don't want to do it. They don't want to give away this big piece of the pie, £3,102. They're losing £1,102 because, again, void periods in a student house is small, and the maintenance can be quite small too, in truth, if you get really respectful students, which, I was a student. I never damaged anywhere that I lived. So, it's high risk. It can be high risk, it can be low risk, depending on the students, really. So, a lot of landlords won't want to give away this much. I'll say, no, I'm not interested. I've been bit before, because usually what you'll include is a break clause. that will allow the company to break this contract in 3 or 6 months if they can't shift the rooms to stop them being too unprofitable and to mitigate the risk of taking on the rent-to-rent, because you're going to have to pay that plus a security deposit usually up front, and it's why you need some money behind you. It's not a totally free strategy, risk-free strategy. A lot of landlords are going to want money up front, and that's fair enough. It's their property. They're worried. They might not understand, or they might have been done in before by a company doing rent-to-rents, because not every rent-to-rent company does it properly or does the proper research. You just see a house, go, oh, I could definitely make money from here. They look tired, they're clueless, and they think they're going to get this. I'm going to take advantage of the situation. They then take the house over and realise, crap, it's in a bad area, or students don't want to live in this house because it has only 2 toilets between the 6 of them, and people want en-suites and things like that in this area, or the houses on this row, there's a lot more competition. Now, this is an Article 4 area, as I say, so that's why he thought he could get this, because there aren't many HMOs out there. Well, there are, but there's no new HMOs being built, and it's just not the case. He was tired, he was clueless, he was interested, but to get to this one interested person, I had to speak to about, in the area, 85 different landlords. 1 in 85 landlords said they were interested. You have to take no's. You have to send out hundreds, if not thousands of letters a month, because landlords are bombarded by rent guarantee. I can guarantee you rent. I can guarantee you it. It's a strategy that works, but it's a strategy that takes patience and skill on how to talk to landlords, because you can't go on Spare Room. If you say the words corporate rental agreement, corporate let, Spare Room will disable your account. Happened to me when I began and I didn't understand. You have to be very skilled at how you talk to individuals. Same on Open Rent as well. You have to be skilled with how you talk to individuals, because these sites don't really like corporate lets. Neither do estate agencies and property management companies. A lot of them don't like them. They'll try and convince you it's subletting, which it's not if you're using the right agreements. But it's a time-consuming strategy. To create wealth, any wealth, you either need to pay to play, or you need to commit your time to it. And this is a time-consuming strategy. It works in principle. You can see that it can work, and it can work well. And I say I have investors who are interested in rent-to-rents, where I'm sending letters, flyers, you name it, to try and find them rent-to-rents that work for them, because it does generate cash flow. Like this property, realistically, could easily generate about £500 a month. You have 10 of them, that's £5,000 a month generated from the student homes, but finding them is the difficulty, finding them is the problem. And that is the rent-to-rent strategy in a nutshell. So I'm going to leave this video there. Please, as I say before, this is brand new. If you do like the content, please feel free to subscribe, share, comment what you want to see, because this is a channel I want to be about you, not about me, about you. And same with the TikTok. If you're watching this on TikTok and you've sat through all the mini videos, please let me know what you want to see. Start a conversation and I will do my best to answer you. Until next time, I hope you've enjoyed. I hope you're having a good day. God bless.